Understandably, investors are looking at their portfolios to see which businesses are at greatest risk of a bigger sell-off. I'm going to evaluate Palantir stock and highlight the three biggest risks that Palantir stock investors are facing right now. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Without question, the biggest risk, and the other two risks are much smaller in relation to this one, is Palantir's high valuation. It has a very elevated price to earnings ratio, price to sales ratio, and any way you approach the valuation of Palantir stock, it looks overvalued. In fact, I've calculated a proprietary discounted cash flow valuation for Palantir, and the intrinsic value per share I calculated is $24, $23.70 to be precise. And Palantir's current market price is $80. And even in this proprietary valuation, you can see some of my inputs. I've given Palantir a very growth-friendly outlook, right? I'm forecasting that its free cash flow will grow from 1.5 billion in 2025 to over 17 billion by 2034. So I'm forecasting a more than 10x increase in the company's free cash flow. Furthermore, I'm forecasting a very long run equilibrium growth rate of 6% for Palantir when I usually do something between 3 or 5% for most companies that I evaluate using this discounted cash flow model. So even with these friendly assumptions for Palantir stock, it still looks overvalued according to my discounted cash flow valuation model. Furthermore, when I look at Palantir stock on a forward price to earnings, it's trading at a forward PE of 114. This is roughly 5 times the valuation of the average stock in the S&P 500. Now, of course, Palantir is a much better business than the average business in the S&P 500. And I have acknowledged several times that this business deserves a premium valuation. It should be trading at a more expensive valuation than the average stock in the S&P 500. But what I've argued in 2025 is that this premium is overdone. In fact, I had Palantir stock rated as a buy in 2024 because the valuation was more attractive to start the year at. In 2024, Palantir's forward price to earnings valuation was in the 40s, and I felt that was a good value for this business. So I can understand if you want to pay a little bit higher, that's understandable. But at a forward PE of 114, that's a big risk. So a business is valued using a couple of different metrics, right? Most investors, most analysts, they value a business looking at either the discounted cash flow, like I shared with you earlier, or the forward price to earnings, or a combination of the two. And the forward price to earnings, if you're looking at it on a multiples basis, this is a big risk for Palantir in that its earnings per share could stay the same, but what could happen is the valuation contracts. So instead of investors being willing to pay 114 PE for Palantir, they might say, you know what, that forward PE of around 50 was more reasonable for this business. So the valuation, the business, the price could fall by half, and it would still be more expensive than where this stock was trading at on average for the last 3 years. And that's why I've highlighted the high valuation as the biggest risk for Palantir stock investors. Now, there's also some concern about insider stock sales. CEO Alex Carr plans to sell nearly 10 million shares by September, and he's already begun selling shares in a systematic way. And that's never a good sign. It's normal, and CEOs do this very often. And for me personally, I don't mind when a CEO sells his shares, especially if the CEO is the founder and has been with the company for a very long time. And, 80 or 90% of his or her family's wealth is in that business. I don't mind when they sell to diversify so they don't have too much risk tied into the business. And then they're making decisions on a risk averse basis because they don't want to lose that wealth that they've built. So I don't mind that personally, but the market overall does panic. I noticed that when insiders are selling their shares, it makes investors curious. Why are they selling? What's going on? Do they know something that I don't know? And so they might rush to the exits. It might not be such a concern if the valuation wasn't so high. So the valuation is so high because of so much enthusiasm and market sentiment that's built in, and an insider stock sale from the CEO could be the thing that gets the valuation back down to normal levels. So if the valuation was already at normal levels, insider sales wouldn't be such a big risk. The next risk I'm going to highlight is Palantir's dependence on government contracts. And usually this could be a good thing for a business because government spending is indirectly related to the economy. So if like we're likely going to enter a recession here in the United States as a result of the higher tariffs, consumer spending is likely to decline because of job losses. But governments, they don't care what's going on in the economy when they're thinking about their budget and their spending plans. So if you're a business and you're selling to the government, you kind of have a little bit more safety in your revenues because it's not correlated to what's going on in the economy. That's usually the case. But for Palantir right now, it's a bigger risk because the United States government is also on a mission to cut spending significantly. And Palantir, since it relies so much on government contracts for its revenue, and the government is cutting spending in these types of areas, Palantir is exposed to that downside right now. And then the last risk I'm going to highlight is controversies and reputational risks. Palantir has been noted for some ethical concerns. Its involvement in data analytics for surveillance has raised some questions and criticism. It's also collaborating with government institutions that may not be in favor with everyone. And you've seen Palantir's business heavily concentrated in the United States. It's having a hard time gaining traction internationally because these buyers are skeptical of Palantir and its relationships with the US government. Still, I will highlight that the first risk I mentioned is the biggest risk for Palantir stock investors. That super premium, super expensive valuation that has a lot of enthusiasm built in is at greatest risk of declining as a result of this stock market volatility and the stock market sell-off that we're experiencing at the moment.
One, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.